Good afternoon and welcome to the end of day review for today. And today is Thursday, September 19, 2024, the day after the FOMC meeting. So we want to see if today is gonna be a follow through or it's gonna be reversal day. And it looked like it's reversal day today. We'll go into the charts, for detail later. But this week we done. I mean, this week is a huge week. It set the tone for the end of this quarter three, and we are in week 38 right there, and we are in quarter three, the last month of the quarter three, September right there. And next week, we have two low to medium impact news is the GDP data on September 26th, and then the PCE's data on 27. PCE data, GDP data right there, and the PCE data. So basically, yesterday the Fed cut 50 point right there, and now let's go look at the charts we have. Alright, let's first look right here. Let's look at the daily and weekly, so we have an idea. So start Monday this week, you see the huge jump right here. It leaves the gap right there. So it anticipates right there, and it continued to rally. Tuesday and Wednesday is kind of when the news come out. At first, it rally, it tests the previous day high right there, and then it pull back. And today is reverse. It's reversed for the previous day, but for the trend right here, it just continue the rally right there. It's very similar. The FOMC meeting is very familiar with this. You have a same pattern like last time. Let's look last time how the FOMC meeting last time behaved. So the FOMC meeting last time we have is in July. We don't have any in August. So let's go and review the recording on July 31st. July 31st is on the Wednesday. Look here. July 31st. Yes, Wednesday right there. Let's review the tape on that day, right? Review the tape on that day to see. All right, so we want to show you the pattern related to the FOMC meeting. So look here, on July 31st and June 12th, we don't see that pattern, but on May 1st, we see the pattern, which is similar like yesterday. Okay, so here's this the yesterday. Right, you see the first move is the huge move, and then on the third candle it start retracement, and then it turned into a reversal. You see that? It take down the buy side of clear here, sell side, all the way. You see that? It again, yes, continue. So right there. So basically, the first move is a trap move that whoever go long right here, follow here, we get paid the price. Basically, it take out the people go long. As soon as take people go long, it start rolling. So we saw that pattern similar to this. That's the reason why we did took the trade in the evening. And it perfectly worked out for us. You see that? That's the pattern of yesterday. Now let's look similar in May. Where's our recording for May? Give a second right here. Second right here, we pull out a May. All right, we find the May right here. Here's the May 1st, which is in Q2. You're gonna see the same pattern happen, and FOMC. The first meeting, the first candle when the data release, it rallied at 2 p.m. You're gonna see right there. You see that? This is 2 p.m. Central Time. So 2 p.m. Eastern Time, which is 1 p.m. Central Time. So look at the 1 p.m. which is 2 p.m. You see that? The first move when the FOMC meeting release that they're gonna keep the interest exchange. You see that the first move right there, the first candle you're gonna see, and then you see it retrace, and now is the second candle, and then it start. Yes, so it did rate the buy side. Yesterday it did not ride the buy side right there. But this one it take both the buy side and sell side of the first candle right there. But after that you start see that is right. Just look at the giant move right here. So the giant move displacement, yeah, 2 p.m. Okay, so that's the 2 p.m. move. Yeah. So the basic that after the first move, the second move gonna retrace and turn into the reversal. See that it take all the sell side liquidity right there, and then the next day after the market is rally. Yeah, let's look at the next day right there, which is May the 2nd. Let's look at May the 2nd. So here the May the 2nd, it go down one more time. It take the sell side liquidity at 9:30. You see that 9:30, right? It take the sell side liquidity one more time, and it start rally from there. Yes, it start rally from there. Yeah. Yes. So right there. So that's the pattern that we recognize. Basically, the first move is it tells you that it's gonna move up. However, it pulled back before it move up. You see, pull back. And yesterday we go in right here. We see the pattern right here because we see it's open at 18, right? And you see the huge up move right there and create fellow gap. So you see that the gap down right here at this level, and then gap up, and then it's what? It's gonna retest this, refill this gap one more time before it go up. And at the same time, we see the pattern is type 1 reversal right there. Break right here and test from below and then reverse. We're going a little bit late on this candle, right? We're supposed to go put a buy stop right here, but we want a little bit confirmation, so we'll let it go in. When it go in right there, we aim just around here. We know for sure that it's gonna be at a level. So if you will let it run overnight, we will get that level right there, because it's never go back to that level. So that's one of the pattern we see that for the FOMC meeting. We see that how they run liquidity right there. So yesterday we thought we have trouble trading here, but now we look back at the tape, it can help us understand how they build up liquidity for the next move. Basically, they rally first. They tell you that they're gonna go up, but not yet. So they trace, then what is that? So basically on the day May 2nd, after that, you see that it go and it rate the sell side liquidity one more time before it start rolling. You see that this is so it rated the liquidity right there at 9:15 right there before 9:30, and you go in right there, you can see that it start rolling from 9:30. See that? Yeah, so it rated the buy side a little different than yesterday. Yesterday is did rate the buy side at the close, the sell side close. You see that it rated the buy side of the previous day or the previous day low right there. You see the logic. So it needs to rate the sell side before it's reversed. It happened the same on May the 1st right there. So you see this, it rate the buy side liquidity of now right here. It gives us. So it needs to rate the buy side what's made right here. Yeah, it needs to rate the buy side liquidity, the sell side liquidity of this candle before it's rally. So, but right here yesterday, before the close, it's already rate the buy side liquidity. So when it open, it don't need to go back and rate. That's the logic right there. So if we want for it, wait for it to rate the buy side, sell side right here, we will miss this opportunity. It kind of a little bit different right there. So in this case, it go back, it rate the buy side of this, the sell side, I mean the low of this. We misspoke. But on this already rated the one from the Wednesday rate is sell side of Tuesday, right? So the Thursday it start rally. But on May the 1st, it did went one more time to rate the buy side. So that's a little bit different right there. But the idea is the same. At first, when the FOMC come out, it rally first and with retracement, do liquidity sweep, and then boom, it rally. We see that pattern before, so that's the reason why we engaged right away yesterday when we saw that it opened strong and then it have another huge upgrade right here. So we engage right here. Okay, let's look at the trade we took. Yeah, here's the trade we took, right? Because it's overnight, so we're not gonna let the recording go. But here's the idea right there. So we go in at that candle. So it 12 20, the candle at 20 hour, right at 20. So right there, yeah, 20 to 21 to 21:45 to 20. So we go at there, yes. Oh yeah, we go in at 20. Yeah, we go in a little bit late also, but it's still Huron right there. Actually, we want to aim for there, but we just test out this idea. So it's the first time we test out this concept right there about the liquidity run, because this one give us a signal that it's gonna go here, and that's exactly happened. So we go, we see the setup right here, but we a little bit hesitant. But as soon as we remember the pattern right here, we go in, even though it's late, but we're going at a 20 right there. So basically we go late at this candle. You see that? Even though, we go late, but we still have Huron. So we go late, we aim at 28 right here. We aim at right at 28. Yeah, at the high of this 26, 28 around there. If we let it run, we will have, you have another huge, wow, another 6R right there. Or if we let it run all the way until 9:30, we still have a huge run. Yeah, next time we just 50-point run, because we know that the run right here yesterday is huge because of the Fed cut 50 point. So there are a lot of upside right there, and we took the trade. And when we come back in the morning, we check the green shot. You see that we go in around this candle, and we get 3R right there, which is 750 right there. So that is, and we take that is the setup that we saw last night. Right, is the break, test from below and reverse. That's type 1 reversal right there. Let's add some verbiage on this one. So basically, you have break, the first step, break right there. Thus is the break, first step, and then you have what? Second, you have test or retest from below. Then the next step you're gonna have is reversal, 3 step. Right there. Yeah, that's the reversal type 1, which is very reliable setup. Just keep in mind, we try these 2 setup. Mainly, we try to build other setup, but this is the bread and butter for it right there. It's the 4 breakout reversal type 1 right there. So it's a long setup, right? So you have break, test from below, and reverse. It's a 3 step right there, right here. So we took that trade right there. Let's put all together for this. All right, we put all together right here on the trade, so we can remember next time we see the setup. Yeah, so basically FOMC meeting the first candle and wait for the buy side, the sell side, rate it, then we can go in. And for the buy side right there, which is exactly happened. And the entry is that when we see the huge fabric up right there, and wait for the type 1 reversal. Set up, then we can entry. Yes, so here's the daily chart right there. You see that level, test from below, then boom, you're gonna break it. Yeah, actually you see a test from below 2 levels. You see this level and this level. Wow, that's the one we mixed right there. This level right there, see that? So yeah, the 4 breakout this level, or the high time frame another, you know, 1.5 point above right there. See that? That's the setup we do so well. You know, we will try to incorporate into our new setup right there. All right, let's see the trade we took for today. That's the first trade we took. So we get 3R, and when the regular trading hour open at 9:30, we let's see how we trade. All right, here's our first trade. Right, when the open, we saw the setup. So basically, you see that break, test from above, then reverse, and we take the aim for the low hanging fruit, which is the low of this candle, because you see that upside is very big. So we don't think it's gonna make a huge down move. So we say aim for this. Right, if you draw right there, let's pause right here. You see, look into the chart. You're gonna see that right here. You see at that moment, you see this level right here, 74, 75 right there. You see the break, test from above, then it's gonna break that level. So we go in right there. We can put a sell stop right there. It could carry out right there, and it did hit there right there. Let's see. That's the first trade we take. See that? You see that? So we move to break even right away, and it hit our targets. So we also see the fair gap right here. We're thinking maybe move the target right here a little bit, but you know what? We have the 3R, and this one we just want to have a quick profits right there. But if we look at the charts, we can see it makes sense. You see that? It go all the way to the mid-range of a London range right there. So if we aim right here, we can have a good one right. But anyway, it's okay to leave money in the table. But by the way, we pay attention right here and make the equal high right there. You see that equal high? That come back and give some idea trade right there. So when this candle form, we see the fair gap down, and then right here we entry again right here, because our idea is, you see the reason right here. All right, so we wait, we don't take any more trades. Yeah, so we're done with this. So that with this recording, so we get 4R right there, beautiful, more than 4R. But then we make some mistake also. We right here, but it's a good mistake. So let's see, we go right here. Oh wait, right here, perfect. So we saw this flip. So we look at this fellow gap. We say, okay, so the setup is that what is gonna be fellow gap and the retest, and then boom, necklace down. That's the setup. But here's the difference. It's not working in this case because we don't see any buy side liquidity rate area. You need to have a buy side liquidity rate so it can make a fellow gap down and then retest. That is one condition that it's mixing. And also you see the fellow gap down and fellow gap up right here. Then the setup that ICT mentioned, which is fellow gap down and retest, it's not valid because that's two regions right there. That's the beautiful lesson we learned. It's okay. We tried out and we lose 1R. It's okay. You see that? We lose, but it's a good loss. There's a good loss and some bad loss. Like yesterday, that's a lot of bad loss right there, but it's a good loss because we learned a lesson. Yesterday, we just simply gamble. Yeah, it's kicked it out. See that? get out right there, and we give back 1R. That's okay. So that's a good lesson to learn when to know, when to know that the feather gap down, when it's gonna be leave it there and make the leg down, or when it's gonna come back. It will come back if we see that there's no, bicellular equilibrated, and also there are gap up before that, so that will be invalid rare. Let's look at screenshot we have last time related to this setup. Yeah, here's the setup related to the feather gap and next leg down right here. You see feather gap right here, right? The break and then feather gap right there, and this one is retest into the feather gap, and then boom, it going down. But look on the left, you see that it did break the bicellular equilibrium right here when it created a gap. But for today, that condition is mixing. You see that right here, it created equal high. There's no bicellular equilibrium rate right there. If there are bicellular equilibrium rate and feather gaps, then you can go in and short right here. It makes sense to short right here. Yes, you can short right there. Right, you can short right there. That perfect, right? If there are bicellular equilibrium rate right here and there's no feather gap up, then it's invalid. Yeah, like this one, you see that? It's half the bicellular equilibrium rate and then it's half feather gap down. There's no feather gap up before that. So it's very legitimate setup, but for today it did not. So that's the subtle difference right there, and we learned it today. It's beautiful, and we learned that's lesson today related to feather gap, second leg down. That's another setup that we try to incorporate into our arsenal right there. Okay, so it's okay. So we give back 1R on this, right? All right, let's look at this other trade that we took for today. All right, here the next trade we take, right? We see the setup, break and test from below, above. It will reverse, so that's the type 1 right there. So we put a sell stop right there, right below this, and it's on at the top, so it's likely gonna happen. So we took the trade, but it's going to our direction right there. We should put a buy. We should move to break even at this moment, because that should be right there. Yeah, it can give us 125 is half an hour right there. 1/2 an hour. Yeah, half an hour right there. But however, it is, wow, it can go to 150, and we thought that it's gonna go more, but it did not. So we ended put into close the trade, get a break even trade. See that? So we get out, and then we try to short again. We need to break even. It gives us, we need to break even right there, which is 5. Perfect. Get out. That's 5. That's good trade right there. So, but we need to learn our lesson. So this guy is supposed to be breakdown. It did not. Then this guy needs to be follow up. If this guy does no follow up, then get ready to go long. That's the lesson we need to learn. See that? So we short one more time. We thought that it's gonna follow up because it's gonna turn into so-called. You see that? Break, test from above, 1, 2, and then it's gonna reverse. That is type 1 right there. All right, it looked like legitimate setup, right? It go into our direction right there. But right here is very tricky. It can flip to invalid that setup. So the lesson learned for it, if this guy flips, then don't ever try to short it. Just wait for direction. You see it flip it there, we should get out right away. But anyway, we decided to risk, $80, and is come back and kick out the trade like that. So in terms of execution, it's still fine, perfect. Yes, so that is the the last two trades we take. Let's look at the last recording we take. Okay, so right here we see this right here. I think we make a we short right here. The idea that it tests from above, break tap up, and then reverse right there. And it did not, it reverse. So right here, yeah, we're going a little bit late. Down here, you have to go early right here. But anyway, it come back and it did not, you see that there? So you have test from below twice, above twice, 1, 2, 3, 1 had to break. So we should move our stop loss check right here. There's no reason to come back. Come back, it could break it. That's the lesson we learned. Yeah. So that means that right here we have to go and go long, because this one's supposed to be break, but imbalance. You go actually have to go long, but it's okay. We learn our lesson. So this right here is it did not, it flipped, then we had to go long right here. It's the last trade that we took. So right here,
order filled.
Yes, so right here we short them, but you know what? We put a stop loss too
Order
tight.
filled.
The setup right here is not like a type 1 reversal. Basically, idea is we just do a opportunity right here. It's like a gamble right here. For lack of a better word, basically this one is the golf lift, and the golf lift on top. That's a call we call the setup is flip at the top, because at the top if it flips, it gives you a signal to short right there. I think we did call as where is okay, anyway, so we put the stop loss 2 times, we got kicked out. That's 5. And we try again. We got kicked out again, twice. And then we fight a little bit, trigger, a little bit hesitate, right? Irritate right there. But we try to keep ourselves calm, and we say, wow, it must be happened this time. So we going, and we know they're not gonna hit 3R, so we just aim for the low of the candle. You see that? And it hit our target. Yes, so that's good for today. After that, if we let it run, it can go back to, it can go all the way to this, not this candle. Yeah, it can run a little bit more. The low of the candle, but we just do the low hanging fruit right there. All right, that's it for today. Thank you for your time and interest. We're always grateful for this opportunity. We do what we love, then success is coming our way for sure. They're better in every way. We are getting better. Thank you and have a great evening. Talk to you later.